On Monday, Brent crude hit $120 a barrel. By Tuesday, it was at $84. By Wednesday, it was climbing again. This week, markets didn't move. They whiplashed. Here's what actually happened. The anchor story this week is oil, and the reason oil moved the way it did is the war in Iran, now entering its second week. Monday opened with a new Iranian supreme leader and fresh fears that Tehran would mine the Strait of Hormuz, the channel through which around 20% of global oil and LNG moves every day. Brent briefly touched $120, then Trump suggested the conflict could be close to ending, and crude dropped over 10% in a single session. But by Thursday, the situation remains live. Over 140 ships are sheltered in the Gulf, major shipping operators have suspended routes, freight costs are rising, and Europe is already feeling it. The Dutch TTF gas benchmark, the European natural gas line, surged from the low 30s to over 60 euros a megawatt hour. EU gas storage sits at just 30%, below last year's level at this time. For European traders, this has echoes of 2022. Wednesday brought US February CPI at 2.4% year-on-year, broadly in line, but that reading is the last clean inflation print before oil's war premium hits the data. Markets barely reacted. Instead, the 10-year Treasury yield climbed to 4.22%, and Fed rate cut pricing is now down to just one cut expected for the entire year. On equities, the S&P 500 closed Friday at 6,632, a new low for 2026, down over 1.5% on the week. 3 straight weeks of losses. This isn't a holding pattern anymore. Markets are pricing in a prolonged disruption. Here's the takeaway. The key risk for traders right now is binary, the Strait of Hormuz. If it gets mined or if the conflict extends past the 4-week window Trump originally indicated, then $120 oil isn't a ceiling, it's a floor. And that changes the inflation picture, which changes the Fed picture, which changes everything. Watch the euro dollar. The dollar has been complex this week, strengthening on safe haven demand, but pressured by trade uncertainty and fiscal concerns. Watch European energy assets, which are pricing in a prolonged disruption, and watch gold, which has continued to hold strength as a hedge against both inflation and geopolitical risk. And separately, the Financial Times reported this week that Trump is pushing for tariffs of 15 to 20% on all EU goods. That's alongside an active war and an energy shock hitting Europe. For traders based here, that combination deserves your attention. Week ahead. Any ceasefire Hormuz news is the biggest market mover. Fed speakers will be closely watched. And keep an eye on next week's US retail sales data for the first read on how consumers are holding up under this pressure. I'm Lewis with WeNews from WeTrade EU. Subscribe so you never miss a Monday. See you next week.